Are you worried about overpaying or not getting seller concessions when buying your next home? In this video, we're going to go over 3 proven strategies that my clients have implemented over the years that have helped them save thousands of dollars. The first strategy has to do with putting your best foot forward. You know what they say, first impressions are very important, and that holds true when buying a home. Too many times, either eager home buyer or novice agent gives off the wrong impression to the seller. And so this is the strategy that I want you to implement. It's simply this: leave enough meat on the bone to where the seller doesn't feel like they gave too much away and you don't feel like you gave too much away. It's the happy middle. So 2 to 5% below where the house is listed for sale, I find is the sweet spot to not offend the seller and to let them know that you are a serious candidate to buy the home. And then also to start negotiations and go forward in good faith to try to put a deal together. Because if they're dealing with a good listing agent, they've not listed the house so far out of the price range where it doesn't make sense, to where that 2 to 5% is really a kickoff point, because when you buy your home is when you really make your money. And that's what you really want to understand. So step number 1, 2 to 5% below asking price is where you want to start. Let's get into step number 2. Now, the second step has to do with the seller concessions. Nothing screams my home won't sell more than someone coming in asking for 6% in seller concessions, using an FHA as an example. You need to have monies of your own to be able to help the sellers meet you halfway. Because remember, you're already asking them to lower the purchase price in step number 1, and that's a win for you. Realize, and only thing that matters to the seller is what they're walking away with, their net price. So when you have some money of your own, you're not necessarily asking for all of the help coming from the seller from the standpoint of, I want you to lower your home price as well as help me get into it. Got to think about that for a second, right? And so with strategy number 2, here's the key. You have to be properly approved. Now, you'll hear online where people or lenders try to say, well, you need an underwritten approval. It's better than a pre-approved. I call BS on that, because if you're dealing with a proper lending professional, they know the guidelines, they've done a proper application up front, you supplied all of your information, and that automated approval is just as good as an underwriting approval. Now, if you're dealing with somebody that just asked you to fog up a mirror, then maybe that underwritten approval thing would hold true. So it's about who you partner with, not just with the realtor, but with your lending partner, to make sure that you're properly pre-approved so that you know how much money you need. And the key is this: for a lot of first-time home buyers, more money in your pocket now is more beneficial than a cash outlay. So what I like to tell people is this: you only want to ask for enough in concessions to make sure that you have a minimum of 3 months of your house payment, your principal, interest, tax, and insurance payment, your pity payment, in reserves, the monies that you already have saved. And best case scenario is you might get that earnest money back, or the sellers might pay for everything. So by being properly approved, you know exactly how much you need in seller concessions to make sure that you have 3 months of the proposed house payment in that lump sum of money that you have, minimum, if not more. So that's the second strategy. Now let's wrap it up with this one. The third strategy really boils down to knowing the market. Gone are the days where it's just a pretty face or a handsome face. Your realtor must know the market that you're buying in, because real estate is all about location. If you buy the right property in the right location, when it's time for you to exit, your exit strategy, you'll be very, very happy and you'll do very well. So is it a buyer's market? A lot of times nowadays, you guys are online and we have Zillow and all these Redfin and all these third-party aggregators, but a good thing that they provide is information to where you're not siloed into a particular agent. And so when you're looking and you're wanting to determine if this is a buyer's market or not, you want to look at the inventory. How many months of inventory are in your local market? Because all real estate is local when it comes to the actual physical product. And depending on where you are geographically in these United States, you probably can pinpoint that, because those are going to be areas that are landlocked and they're not building a lot of homes, not so much in the middle of the country. So if we're in the middle of the country and you have more months of inventory, not necessarily a buyer's market, especially after the pandemic. And here's why. Most baby boomers, okay, people that were born before 1964, I believe, okay, 3 out of 4 of those folks own their home cash out. And a lot of them own more than one. And then everybody else that was able to buy before the pandemic and was able to refinance or buy right before rates started going up, late 21, 22, you're sitting on a very low interest rate. So I've routinely seen folks frustrated because all the gurus are saying, hey, this house is overpriced, but it's not if the owner doesn't have a mortgage on it, number one, and number two, if the holding costs are so low, they're just waiting for the right person to come along. So again, that's why it's very important to deal with the right agent so you're not wasting a lot of time. Unfortunately, a lot of people that have been on the sideline for 2 years, and one thing is true, if we're honest, home prices came down from their highs and bounced, but now they're incrementally rising really across the board. Depending on your market, it's a little as 3% up to 9%, depending where you are buying. So those are the 3 strategies. Just to recap, you want to get the home at the right price. So offering 2 to 5% from the list price is really a good start so that you don't come off as a novice and not a serious. Number 2, when you're asking for the closing costs, if you're going to ask for them, you have to have been properly approved so that you know exactly how much you need to be able to have at least 3 months of your proposed house payment in your reserve after closing. That's the goal, because you don't want to be house rich and cash poor. Okay, that's the second strategy. And then number 3 is choosing the right realtor partner that really understands the market and can express to you in terms that you understand where homes are sitting, and there's potentially seller motivation to sell. And it's not a situation where the home is free and clear or the rates are so low that the carrying costs are not putting the seller in a motivated position. So those are the 3 strategies. And for those of you that stayed around, I have a bonus for you. If you do find a house that's been sitting around, here's the deal. Try to put your offer in towards the end of the month. If they have a mortgage, the sellers are more than reminded that, hey, I'm carrying an additional cost and I'm making another mortgage payment. So by you coming in with a strategic offer that makes sense, you might catch that attention of that seller because they just had to make another mortgage payment, and that just might be the deal. So that's a bonus for those of you that have stuck around. If you like videos like this, you want to subscribe. More importantly, if you know somebody that this can help, share it with them. Because you watched this video, you might be interested in down payment assistance programs. If you're curious or want some more information about different Texas down payment assistance programs, watch this video right here. And if you're outside of the state of Texas and you want to know more about our nationwide down payment assistance programs, watch this video right here. My name is Robert. We simplify the home loan process, and I'll talk to you on the next video. Y'all be good.